So when net came down, I thought that it was done. But I mean, you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 green days while the market isn't. So that's a leader. And we saw the same with Affirm. While the market is down, this has been doing really good. And look at these volume bars.
So what is that green line? What is that green line? 20, what is that, 20 or 50 days? Or
I think that's that. I think that's a 20. I think this is
huh?
this is 20. This is 50.
The red is 50.
Yeah.
Okay.
We'll go back to my charts anyway. So here, what I want to show you is the volume, the amount of volume in these stocks. For IPO, there was, how much is that? 25 million shares for a couple of days. It's 25 and 20. Right now, it's trading 25 million. That generally never happens. It means that there is a huge amount of buying pressure on this stock. So when this breaks out, I mean, that could happen after, the market turns around, but this one could be a monster. This could have a monster move when it breaks out. I'll probably have a very big position when this breaks out. Right now, I do have the diagonal options right now. And let's talk about this upstart. So I always compare this with what's happening with the market. Okay, market is not near the highs. And it did not go down a lot. So if you look at it, 1, 2, 3, 4, 5 red bars. And look, you can't even compare it with that. Look at that. We have so many red bar trends in the market, even today, right? I mean, that's how you see if it's a leader or not. And upstart went from, even from here, it's almost doubled. Actually, it's not, about 70%. And the amount of move down is nothing compared to how much move has happened before. So I bought some puts when it broke this level. Okay, it was a small position. And that's it. I mean, after I bought it, there was one red day and it started moving higher. That's why I got the calls on this one today when it broke this level. So what I was saying is when you have a put or anything, right? I mean, that in fact, this 319, I think this high is around 319. Yeah, 319. And this high is about 323. You need to have a stop where you're going to get out. So once it breaks the 323, this is not going to stop. I mean, this could probably go much higher because there is not a lot of supply next to it. Let's go back to my charts and think or so. So I had two levels. One is 323 and the other one is 337. And it tried to stay above the 20-day for 3 days. And today it tested it and started moving higher. That's a signal for you, to get out. And this is the leader. I mean, the earnings and everything. I think we talked about its earnings last time. The earnings are ridiculous. I mean, I have never seen anything like this before. If you look here, the sales are up 1,300%. Okay, even the earnings are up, I don't know, over 1,000%. So when you have that kind of growth,
no, I got that part. But why did it break from 346 and came down and went up?
That's because of the market.
Also, I know that's what. And also, what about the market conditions currently?
Market conditions are not good.
Then why this is going? That's what I mean.
That's what the leaders
problem
do.
Is every day, right? Every day there's a big sell-off happening on upstart.
Yep.
Every day. So it just goes and suddenly there'll be a big sell-off.
Yeah, I mean, doesn't mean
So,
that it's going to stay there that all the time, right? It's going to change.
but you
And
know, why do you think people will hold for a long time? Because you know, it's very, I don't know, with the market conditions and with everything, and with the stock being like 400 times its earnings. Why do you think it still holds there?
because of the growth, look at that. It had 14 cents last year,
Mm-hmm.
and it's now $1.39. And when the earnings came, that's a shock. Actually, one of the reasons most of the stocks move really high or drop like a rock is because of the new information. The new information they got here is the earnings right here, and they have been accumulating since. Now, as soon as it came down, they started accumulating, and this is not the retail money at all. This is this is all institutional money, and this is in an early stage, right? It's only 25 billion. If they are making a huge difference with AI, maybe, I mean, this could probably $1,000 stock. Who knows? In a year, the way it's moving, I wouldn't be surprised if this goes to $1,000. And then most of the leaders are that way. What happens is when the market is not totally dropping, I mean, it's not going down every day, those stocks are gonna, you will keep seeing the buyers in there. And as I said, Net is one of them. I mean, that's a lot of buying, right? I mean, that 111 was the breakout. So when it came to 111, it started moving higher again. So a lot of buyers came in. I mean, that's institutional money. That's how you find the leaders. I mean, why it's going up? It's based on those institutional investors' research. And I mean, for UPST, you can directly see that right here.
No, I was checking even the ticks. I mean, mostly. But most of the ticks are like 2,000, 3,000 max. So why do you think it's institutional? If institutional, right? Sorry. You
It
can
is
hear me.
institutional
So
money.
if institutional, they buy like, big, right?
No,
Maybe
they don't. Actually, not these days anymore. So what they do is, even the hedge fund managers.
So the max they've seen is 2,000 or 3,000 per
Yeah,
per cycle. I mean, if they're pumping big, right? See, there are only 2 times in the morning they pump. The reason I'm just trying to understand that move, and why after that, right? A lot of retailers came in and jumped onto the stock.
I still think this is more than retail money. I'm sure this is still institutional money. Today actually is not a lot. It's only 16. It's actually 16% less. So this isn't. But if it breaks this 346, you will see again, 10 million or whatever. You will see that. But again,
How much money came in today?
Well, I mean, it's less. It's lesser volume. It's higher than what happened yesterday, but in general, it says, right, volume is minus 16%. So it's less than the average volume that it has. I think the average volume is probably the last 50 days.
The average volume, okay.
Yeah, it's around 5.5 million. Today it's only 4.6 million. But that could also be skewed because of the volume right here. How much is that? That's 17 million. Yeah. So the average is skewed because of this huge move. Again, our job is not to worry about why something is happening, because by the time we know why it's happening, the move would have.
My worry is I have put. So
no, I mean that's why you need to have a limit, a stop limit of where you are going to get out.
I mean, I made a mistake actually. Like last 2 times it worked for me, so I went in very big. I thought I'll cover by day end, but it didn't happen. Let's see.
Well, you should, if you want to go big, you should probably go big on the ones that are breaking down, like Cuervo, right? Today, Quero.
I made a
So-
mistake. I mean, every day the volume, I mean, what I have seen is Astra goes up big and corrects at least $5-10, at least $5. So it didn't happen today.
Okay, actually, a lot of people does that, but what they do is they have, let's say, if they short or if they buy when it is. Well, let's go back to. I know what you mean, but you need to figure out before you get in. You need to figure out a price where you are ready to get out.
Yeah. I mean, I was
And most of the time, what people do is, let's say,
no, I kept on buying. Actually, I initially it made money. Then it made a move.
yeah, I see that.
So I kept on adding puts. So I'm to make a price even. So
Yeah,
so that became too big now.
yeah.
So I have to see at least if I make $1 tomorrow, I'll be break even. If not,
Yeah.
it's good.
So if you are you able to see the chart?
Yeah.
Okay, so the if you are shorting it, right? If you short here, you will probably have this 5-minute high as your stop. That's it. That's what most of the short-term people do, and they don't get into this. And if you are going long, okay,
No,
if you are buying
where should I
somewhere,
short? Where should I short?
no, I mean, if you are shorting in the first 5 minutes, okay, that's first 5-minute high would be your stop, or you could have a stop.
No, actually, I got it at 525, 325.
325
Yeah.
right there.
There. After that move. Yes, there. Then
You
it came
bought puts?
down and then it went up, right? The second go up, the second before 2 reds.
Actually, that's a wrong time to get in at all, because 323 is the recent high. So that's a breakout. So you'll see a lot of buyers right there.
Yeah, that's the
Yeah.
mistake I made.
So you
So
bought
after
puts or
that
you
red,
sold puts?
No, he
yeah,
bought it.
after that
He bought puts.
red correction, I thought, I'll make money. So I left it. Then it made a big move. The 2 reds near 330. What is that? 330. Yeah, there.
Yeah. I mean, see,
I
I
should
mean,
have got out there.
whenever there is a breakout, you will see a lot of people waiting for it. And Upstart is a darling for many of the growth. Even the retail traders, they love it right now, because a lot of traders have doubled and tripled their money in this one. So whenever this moves, they are all in. They are all coming in to, buy it. All right. Looks like we don't have a lot of people today, but anyway, I wanted to talk about a few things.
Oh.
So I thought we were gonna, when I wrote this as an emotional move, I thought it was moving sideways. I thought it's gonna break higher, which it did not. It broke lower. But last night I was not in the market while this happened. But whenever there is a move like this is called single prints in market profile. What it means is everybody stops are being hit, right, and ES is moving lower. Really.
Can I repeat again?
Okay. The move from here to here yesterday, not today. Okay, when this is an emotional move, because
Now what is this ES, right? The SPY?
yes, yep.
So okay.
So people have stops below this level, and all the stops are hit. That's why you see this big, huge move down, and that's an emotional move. Generally, what happens is there are three scenarios in that case. Either the market opens above that and trends higher, that is the most bullish scenario, and the market stays in those prints, those single prints, that's mildly bearish. And if it opens below that, that's the most bearish scenario. I mean, it opens below this range and starts moving lower. generally, I mean, the way it was moving the whole day, it felt to me that it was about to break out, but it did not. So far, this is not what I was expecting. I mean, for a bullish move, this is definitely not good. I want to show you.
So KB, one question.
Yep.
So when you say all the stop losses will be triggered, and they, like, do they? I mean, because do all the stop losses are known? I mean, they know that, because when you put a stop loss, that the exchanges know that there is a stop loss and they just get triggered. I mean, they dump, or
Well,
maybe what I mean is,
in
do
futures,
other
you don't
people
know if
can
it's a
use them?
stop loss or if you're buying. It's the
Hmm?
same thing. In futures, right? I mean, you don't know if it's a stop loss or the other guy is buying it. So
That is in futures. Okay.
yes,
Okay.
yes. Yeah.
No, what I'm talking about the daily. I mean, the intraday.
Intraday, yes, that's what I'm talking
Do they
about.
do? I mean, they will able to see our trades. I mean, where the stop loss are? Will you able to see them?
Yeah, right there. I mean, look at that 3K, 3K, 3K. Those are all the buys or the stop losses. Now, I mean, right now this is not, but some you can. I
Where
mean,
you are seeing it?
if it's really big,
No,
yeah,
no.
this is the volume.
Where you see that? Where you see that?
This is in
Is that
Thinkorswim.
TNM? The Thinkorswim? Sorry.
Volume, yeah.
No, is that in Thinkorswim?
Yes. Or generally, if you go
Where
here,
is that? Can you show me that? I never seen that. Can you show me? How do you see that?
it's in the Thinkorswim platform where if you click on the active trader, this is where you see all the volume to the left. Volume, buy, bid, price, as size, bid size, as size, and sell order. I mean, the active trader is what you need for that. That's the tab. And then there is something called level 2. That's where you see the orders. But I mean, the volume in ES is so high, it doesn't, most of the time, it doesn't matter how many people have their buys or sell stocks, because it has the most volume. Yeah.
Sujay?
All right. Anyway, so what I was expecting is, until today, futures, remove. So we had this big gap. I mean, I did not like the gap when it opened with such a high gap. Okay, and generally, while the market is going through a correction, to get out of that correction, let's go to the 1 hour. When it came down so much, you don't want to see the gap. What you want to really see is it to open lower and then move higher on the day. And whenever there is a gap, you will see a lot of selling. And I thought we'll probably fill this gap so that 43.55 is the low of the gap. So it would come all the way here and start, it starts moving higher. So until today, well, I mean, last night it went down a little, but we are not seeing the overnight session here. So it closed at right there and it opened here. So the best thing to do was, I mean, if the market was bullish, because the gap is closed, it should have started moving higher, which it did not. But the thing is, the whole day, there were no sellers either. I mean, the sellers came at the end. So I'm not sure where it's going tomorrow. And so far, it's down 10 points again. If the market breaks this trend line, and there are so many things that you look, the longer you are in the markets, you will understand this. So what happens is, if this was a bigger correction, this was a low, and this is the next low, the distance cannot be so less. I mean, how much is that? This one is around 42.95, and this is what, 42.60. So you moved, I mean, you made a lower high. I keep talking about this all the time. So this is your high, and that's your next lower high, and this is your next lower high. So it went all the way there, and it couldn't move lower. It should have gone all the way at least here or more, I would say. Actually, it could have gone all the way down to 41.38 or so, but it could not, which means that there are not enough sellers either. If this was supposed to be a big sell-off, so based on that, we are just moving sideways right here. That could also be why we are seeing, all those growth stocks move higher too. So for now, I am more bullish than bearish right now. But if we break this 42.96 level, then yeah, I will probably sell all my short-term stocks again. But for now, this is still bullish. Did you guys understand what I mean? So for example, let's look at this one. You made a high here, okay, and the next high is all the way here. Okay, you had 42.30 and 42. That's 50. That's 50 points. That's decent. That's decent. Okay, and the next one is what? I mean, the distance from here to here and here to here is less now. Again, the distance has gone down. It means that the amount of buying power is going down. That's one of the ways to look at if the market is at the end of the bull move. And the shorter the new highs are, it means that the market is losing the momentum. The same thing is happening here. If there was momentum from here to here, how much is that? 45, 450. That's almost 250 points. And the next move is like 5 or 7 points from here to here, which means that there are not enough sellers. If this was a serious sell-off, we could have seen another, I don't know, at least 100 points. So that's 4,300, maybe 4,200. At least we could have come all the way here or more. That's why I'm still not totally bearish on the market. That's why I keep adding some, longs, and I'm doing both sides right now because the stocks that are going down, and the stocks that are holding well have a good chance of big bounce if the market turns around. So, and also this is one thing I wanted to talk about. Something like this. This is an emotional move. This is totally short covered. Okay. As soon as people got in, but once it starts moving higher, all the shorts are like, okay, get me out. Okay. And whenever there is a move like this, and when it stops moving, if it comes back, really, really fast. So what I mean by, let me get you another example. Actually, we can talk about Natia. So if you look at this one, right, it came down really fast. So whenever, it means that there is not a lot of there might be just one big buyer. I mean, if it moves sideways and there is a lot of volume right here, net would have come here and stayed here for a while. This is something that I've seen in so many stocks. Whenever something goes down really fast, there's a good chance it's going to come up really fast because there's not a lot of volume here while it's coming back. And all the guys who sold right here, when it starts to move higher, they wants to get in because they know that they were wrong. They want to be back in the stock. So this is emotional. This is emotional. That's why it makes more sense to have stocks with more volume. If it has less volume, we'll see these spikes and these drops. Look at that. So you had a lot of volume right there, and and this move was taken out really fast, and that happens all the time. It doesn't matter which, whether it's a stock or an ETF or an index or whatever. So okay. So whenever it is getting into such a move, it's better to get out. If you're short right here above this level, you should get out right away, because this move is going to happen really fast. So that is something I always keep an eye on. That kind of helps to not have bigger losses. That happened today too on this one. I got out of it on this one. You don't have a lot of volume. You had enough volume right there until here, and as soon as this went down, it crashed. And look at how it jumped when it moved higher. From this could have crashed all the way right here. That's what I was expecting. But again, I bought it on a breakout, and I wanted to wait for a day. And then when it started moving below these levels, there was no point in staying in there, because if it goes down, it could go all the way to 43. That's a big move, and for a stop loss especially. Actually, let me open that up. Can you see Slack now? So this is the chart I was talking about. Whenever this is done, that's when I put it, I took a picture and I put it. Whenever it moves below this level, which is, I don't know, 43.90 or whatever, I was wondering that if it could crash all the way here. On a bullish day, this would have moved sideways and up. Okay, but once it moves below this level, this is where most of the volume is, it could crash, because this move has been swift. So when it comes back, that's exactly what would happen. So that's what exactly happened in the on that day. So I mean, I know most of you can't watch this all the time, but knowing that these things could happen, it kind of gives you. So this is where this is the one that I was showing in there, and look at the move below 43.95. It just came down really fast. So these are the things that will help you if you are watching ES. I want to see how UPST did yesterday. Yeah, I mean, this is obviously faring much better than the market. I mean, market from here, it went all the way down, and this one went sideways for a while, and it stayed within the range. But the market, it went all the way down, right? I mean, that tells you that this is not a stock to go against. And again, most of the time, the best stocks to go short are the ones that are near the lows, because there is nobody buying there is nobody buying this stock right now because you have so much supply here, and a lot of people, that's their final last line in the sand for them. As soon as this breaks down, they are like, okay, get me out. I mean, this could go. We don't know how far this could go. Okay, if this market turns into a correction, I was looking at this could go all the way to 121. That's possible. So that's why I had these fibs, and I was looking at $124.56 or whatever here, and you have some of the important price levels are the breakout levels. So this is a breakout level. So that's your 150%. And which this is not a coincidence. This happens all the time. I mean, anytime I draw this coincides with the levels here. I mean, the fibs are amazing. That could be another level. So it moved sideways for a while and it bounced off of that. Actually, I would probably have that here, because if I ignore this one, you had this could be the breakout, and it came back to the breakout and it started moving higher. So that's an important level. So that 151 could be next where it's going. But if the market turns or gets worse, this could go really, really down, because all these guys, they are waiting for it to come back. The more that, and also you will see the climax for this when you see a very big candle, like let's say if it's going down a little bit at a time, or again stopping here or moving higher, you will at some point see one or two really big candles. That's the extreme. So when I was first trading, whenever I see this big candles, this is where all the FOMO is. A lot of amateurs will get in and start shorting this one, especially on the upside. When it starts, let's say if it gives when it has a very big candle, that's when they start piling up, and it goes down really fast. It will probably have one big candle that will take away another 5, 6, 7 candles, and they won't have a chance to get out. And this happens all the time. So whenever, that's why I keep this day range and ATR. Whenever you see twice your day's range to be twice as much as the average true range, you have to be careful. It means that could be the climax of that move. I mean, these are the things, as you watch the market for many years, these are the things that you will see, and you'll probably see other things that nobody else has seen before, and you will make up your mind. And most of the times the same pattern happens again and again and again. Anyways, let me know if you guys have any questions. For now, as I said, right, I mean, yes, it's not bearish yet, but it's not bullish either. So it has to break above that 43.55 level and start moving higher. I'm going to be bearish if it starts breaking that 42.96 or so. Those are my levels. And then for any stock, the best thing to do is to have these levels, and it's easy to trade. It will get easier. I mean, initially it would be hard when we look at the PNL, and then when the PNL starts going down, we want to make some changes. But if you have levels and follow the levels, in the long run, it will help you a lot, and you won't make any emotional moves at all. And then one of the things that I have never done is go big on anything. I never go big on anything. I always believe in do smaller traders, many number of trades. Okay. So I had just one, I was following one of the subscription services in 2012, and he was going short QLD, and he kept adding, 10 contracts at a time, and I followed him, and I got burned. I lost like 1/3 of my portfolio in one trade, and that's it. That was it. And I never traded big. Now I have my levels. Even in stocks, if I have a bigger, let's say 5% of my portfolio in a single stock, I have really tight stops. And most of the time, it will never exceed any single trade. The maximum stop would be 0.5% of my portfolio. If one trade loses 0.5% of my portfolio, I'm out. And then when you start when you start with smaller portfolios, that could be 1% is fine too. 1.5% should be fine in the trading account, not in the long term. So as long as you have certain rules, believe me, you're going to do better. Let me know if you guys want any.
Hi, this is Arvind. You want to continue to record, or maybe we can stop the recording?
If you guys don't, okay, hold on.
Yeah.
KP, I have a question.
Yeah, go ahead.
So whenever you're involved in a trade, right, like a back ratio or even a vertical, right?
Yeah.
So when you have a sell leg, so if there is a particular price level, do you place your sell leg below that price level or above that price level? Say if it is a vertical put, you bought a put and you sold a put at a lower level, lower price.
Yeah. Are we talking about ratio spreads or a vertical right now?
No, in anything, right? Whenever there is a sell leg is involved, right? So let's talk about a vertical.
Okay.
Say like you're buying something like a 70-60, right? Buying a 70 put and selling a 60 put, right?
Yes. Okay.
So if your key level is at 62.5, there is a support at 62.5.
Yeah.
Would you try to sell it at 60 or would you try to sell it at 65?
Well, that depends. Let me. We had one of the trades. Right? What was that? 4 was a trade. I think this was this one. Yeah. So 60 to 50 is a support, right? So for this one, if I am doing if my sell is at 60 to 50, okay, then I would probably do a butterfly on this one. Okay, but if it's a vertical, as long as for most of my verticals, I don't care. Okay, my goal is to double at least whatever I am paying. So for a $5 spread, I never pay more than $1.60. Okay, so the maximum, even though it says the maximum you get paid is $5, you never get that. You have to wait until it expires to get that $5. So generally, if I pay $1.60, these days I'm not even waiting longer. But if this was a bear market, I would probably wait until it doubles, and sell for $3.20. So in this case, right, it's better to have, if it's a $5 move, a $5 spread, I would do a 70 and 65. Okay, because I want it to go all the way to 60 to 50 and maximize my $1.60 into $3 or $4 at least. So that's how I look at it. And what I mean is, the price that I'm paying and my target should work together for me to get whatever my goal is. And my goal for any spread is to double it. So if I can buy the 70-65 for less than $1.60, that's what I would do. But if that thing costs like, let's say $2.50 or $2, then I would probably go down and look for the next one that way, which does not cost me more than $1.60. And the reason that you would have that 70.65 as $2 is if the volatility is very high for that one. But most of the cases you won't. And let's look at one of the spreads that has high volatility.
KP, on that subject, right? If we go back to 70.65, because you gave that example.
Yep.
Not necessarily this stock.
Yep.
So what I have seen is, or like what I like 70.65, right? You look at in the morning, it might be asking $3 or $4, right? Or like it changes. So how do you track that value between that spread?
For Thinkorswim, actually, I never had that problem before. So for this one, let's say you're buying the vertical. Oh, it actually shows 210. But generally, I mean, that could be because we are after hours, and the distance between these two is 40 cents, and this one is what, 35 cents. So and it's at 70. Yeah. For this one, oh, actually, sorry, did I do 70? Yeah, 70.65. Sorry, 70 and 65. So these two.
Yeah. So now, do you keep this like running that way, or when you are, because I like the reason I ask is when you do the Tesla put spread, right?
Yeah.
It's very hard to catch what you are getting. Most likely, I end up getting it. If I wait, I mean, because I'm not constantly in front of computer. If I wait, then I might completely miss it. From like say you got like 85 cents, I got like 65 cents. But then if it like becomes less than 50 cents, it's not worth the risk you're taking, right? So do you constantly, how do you like track that, credit spread?
Actually, I don't track it here. What I do is, okay, the time, there are two price points where I buy them. Okay. So either the stock is going down like this. Okay. When the stock is going down like this, you will get a better spread. And then I wait until it kind of stops. Okay. And then when it starts moving higher, or when it starts moving sideways. But on this drop is when you get a much better. If you are even late for 5 minutes, you won't get it. So it's totally time sensitive.
Because I think last week you closed that credit spread with 5 cents credit. I think I did it like 20 or 30 cents debit. So it was just a matter of an hour or so.
You shouldn't close it at all. You shouldn't close. For 20-cent debit, you should not close it at all.
Okay.
It wouldn't make any sense. What the best thing to do is, as soon as you are in a trade, at least put 1 or 2 trades for 0.
Okay.
To close it, one or 2 contracts. I do that all the time. That's how I can see on my screen on the working orders whether what is the current price. And generally, I don't always get it, but generally I have my charts in front of me all the time. That's how I know. But what I mean is, let's say if I bought it on this dip, okay. And when the stock starts going higher, that's when I go back and look at how it's doing. And if let's say I got a credit of 50 cents here, and when it starts moving higher, I'll go back and I'll put 5 cents or sometimes 10 cents. If I make $1, I wouldn't mind closing it for 10 cents if it's like 4 days away. Okay, because if I'm closing it in another 4 days, I can probably make another, I don't know, 50, 60 cents or whatever.
Okay.
And then the more number of trades I do, the more credit there is.
Yeah. So I remember last week I was asking you if I had done that 740 and 640 spread, right?
Yeah.
I would have made like, I know you said you don't do that.
Yep.
Is there a specific reason you don't do that?
No, I mean, okay. So the risk should work against the reward. Okay. So, I mean, in hindsight, it looks everything looks good, but we had a lot of good news for Tesla in the last 1 week, right? Even yesterday, is it today? The 20%. Well, my point is, if it starts moving lower, there is no way for me to adjust it. Okay, you can you can adjust a butterfly, you can adjust a ratio spread, but you cannot adjust a vertical. Okay, I mean, by adjusting a vertical, you cannot at least go break even, because once the money is lost, it's lost. Okay, not for ratio spreads. For ratio spreads, we have done this many times.
But so you like let me give an example. If we sell 740, right?
Yep.
So we could buy 700 quickly, but it won't be a profitable trade.
I don't. What is your first trade? Oh, hold on. Let me stop the recording.